All right. Good morning, Jim. Thanks for doing this call with me. I really appreciate you taking time out of your day. I know you're really swamped right now with a bunch of stuff that you have going on in the M&A world. And I think you had recently seen one of my videos posted up on LinkedIn about the SBA acquisition financing. I know we share a lot of uh, similar perspectives on the SBA financing. We both like it. We don't look at it as redheaded stepchild, and I know that you use it. And, you go. It's a go-to tool for you in a lot of different things, specifically because a lot of times it just makes sense from a cost of capital standpoint and a risk standpoint. And so I wanted to take a little bit of a deeper dive today on what are the possibilities for that SBA acquisition financing, kind of get your thoughts on it in general, maybe as long, for more of a history of it and how you've used it, but then also some of these new terms and some of these new opportunities that have come out of the COVID crisis, out of the CARES Act, et cetera. It keeps getting better and better. You kind of take a deeper dive in to see what your thoughts are on that. So if we could, again, thanks for being here today with me, and maybe just give a little bit of a brief background in some of your, M&A work that you've done over your career, your background, and kind of maybe how you've used SBA financing in the past, and give us some context to that maybe before we dive into the specifics, if that's okay.
Sure. Well, thanks, Dan. Thanks for letting me join you this morning. And this is actually something that you talked about. I have a high level of interest in, mainly because it appears that a lot of the business owners and entrepreneurs that we serve in our businesses just really don't know about this opportunity and this opportunity for growth, and that the government in this case is actually doing something right. And the SBA financing for acquisitions has actually been around for a few years now, but it appears that the activity with the CARES Act obviously has brought it to the forefront. And for the first time, a lot of business owners are now starting to find out that there are these financing options available through the SBA that they just never even knew about. And for example, the acquisition financing from a standpoint of, let's just say, a small business owner is looking to grow, or an entrepreneur looking to start a new business, many times they are completely overwhelmed by the idea that they're going to have to find a loan. More of a conventional loan is usually the only way that they are aware of getting financing to maybe do something like this. And in that case, of course, it's all related to collateral and the assets of the company and a loan to value ratio. And so two things that scare off these individuals, whether it's a business owner or an entrepreneur, is the idea of, first off, finding the financing to actually cover the purchase price of the potential acquisition, but also the guarantee. Business owners and individuals, they just are always so turned off and scared about a personal guarantee. They always think that the government's going to, or the bank is going to come along and take their house. And it's a real fear, it's a real concern. But again, when you're talking about a conventional loan, it's based on the value of the assets, the physical assets, the collateral, the loan to value ratio. And many cases, the purchase price, of course, is going to be much higher than that. Well, the SBA kind of figured this out a few years back, and so their loans are based on a cash flow analysis, not a value of assets or a collateral assessment. So the goodwill or the value of the business between the purchase price and the physical assets, as you know, is made up of intangible assets like customer lists, intellectual property, those kind of things. And the SBA actually incorporates the value of that goodwill into the loan. So many times, ultimately, they will be able to do the deal at 100% of the purchase price that's being considered for a target company, whether, again, entrepreneur trying to get into business for the first time, or whether it's an acquisition target for a business owner looking to grow through acquisition. It's a complete game changer. And that's the way it's been even up till now. Now, you asked a little bit about my background. I've been working with business owners, mostly privately owned companies or entrepreneurs that are looking to grow their businesses And so some kind of an M&A transaction, usually whether it's getting some financing just for growth or whether it's the financing like we're talking about today for acquisition. And so done a variety of different things over the career in securing financing for companies and for their growth. And more recently, been using this SBA instrument even before the COVID hit and therefore the CARES Act. Even before that, been working with this particular instrument from the SBA and have closed several very successful acquisitions where the buyer, potential buyer, would have never even moved forward on capturing a real accretive growth strategy through acquisition because they just were thinking more in the old style conventional way of I'll never be able to get a loan for the full purchase price. I'm going to have to go get equity. I'm going to have to bring in investors and all those kind of things. So it's really been in the last couple of years pretty enjoyable to see this. And we'll talk a little bit more about maybe the process and everything else. But unlike the SBA of 20 years ago, where most people thought of it as the last resort for any type of financing, because and concerned that they took forever to actually approve loans, that you had to pretty much give away everything and put everything up for security. That's changed. The SBA of today is a very different group.
Yeah, no, thanks for that. So one question that kept coming to my mind was, does that mean that there are companies that are maybe bootstrapping and they keep bootstrapping too long? And I'm not trying to give you a leading question, but they bootstrap too long because they don't see that they can get financing, because obviously the commercial financing and the traditional banks are really, they're heavily like asset-based lenders, right? A lot of times. So, building up those intangibles, customer list and things like that, and the software development, whatnot. Is the SBA something where it can kind of fill a gap in between that I'm not quite financeable yet to the traditional bank, but at the same time, if we keep bootstrapping, we're taking a big risk and trying to make our cash flow work? Am I hearing that right?
Well, yeah. And again, let's take an entrepreneur, someone who's been in business, an executive or something, who's decided that they really want to start their own business. And in many cases, they think that's their only option. So
Right.
by nature, starting your own business, you're bootstrapping, particularly if you're using your own funds for a while. And then you have to make a choice whether you want to take out some outside investor money, or if you want to take a personal loan on your house, all those kind of things. But that's where they're building their business, and they will stay most of the time in bootstrap mode for quite a long time. And that cash crunch will become quite painful. Whereas the option here is don't even think about starting a company. How about acquire the company you want in order to begin moving into business ownership? And that is where you can now use that goodwill value of a target company that you find to help you finance it and never be in a bootstrap scenario. Because what's one of the couple advantages of the current program.
Oh,
again,
so you cut out bootstrapping altogether then?
Cut out bootstrapping altogether. So you find a target, you've done a good valuation on it, the cash flow of the target does support the loan. When you go through a entity that's working with the SBA, they'll take it. You do need to price it well and make sure you're not overpaying for the company, but that's where people, advisors come in and help you put those valuations together. But assuming you've put a good value on the company and working with the bank, under this scenario, you will be able to finance up to, in this case, 90% under the new CARES Act scenario of that overall purchase price, due to the fact the SBA utilizes your goodwill as effectively collateral in the loan assessment. So you should never need to necessarily have the bootstrapping feel. Also, one of the unique things people don't really know about is you can incorporate a chunk of working capital into the loan as well. So not only do you have the purchase price on the entity, but as you get towards closing, you'll work with the lender on determining what kind of working capital you need to actually get this company going. And so let's say that turns out to be $250,000 of actual working capital, whether it's new hires to cover certain aspects of the new company, new equipment. All those things can be rolled into the loan. So not only do you have the loan for the acquisition, but you also have a little bit of a war chest to get yourself going. So it's almost the opposite of bootstrapping, is you can use this to give yourself some of that additional working capital and cash to, in the first 12, 24 months, really make the acquisition take hold.
No, that's neat. So what you're saying is that instead of, like, let's say I have I want to get into a new business for the first time, or maybe I want to get into a different kind of business, or a bolt-on, or something that's a vertical that, you know, relates to my own business. Instead of just starting it organically, I say, hey, I'm gonna, let's just say it's like IT service or something, or managed care, right? Say, hey, I'm gonna go out and I'm gonna buy a company for $1 million or something like that, because I know you can go for 5, but let's say I buy it for $1 million, and you're saying, hey, get that thing started, and then pump that thing up instead of starting from the ground up and trying to get it off the launch pad. So I'm guessing that's kind of what you're saying. I'm seeing you're nodding your head, but is that more risk, though, in the fact, though, that I have to take on this debt and personally guarantee it and all that kind of stuff, versus maybe bootstrapping it? I think that's what a lot of people are confused about, is what is the real kind of risk reward balance there?
Sure. Sure. Well, that actually will take us a little bit to what's most recently happened with the CARES Act, and what they did back in December, particularly as it related to the SBA 7A loan, which is this loan that people use for the acquisition. And up till December, there were a lot of benefits that the SBA was putting forward to attract people to use this. But just the underlying makeup of this type of loan is, in this case now, under the new changes, that the SBA actually guarantees up to 90% of the loan value. So that means someone coming in and looking at this does have to guarantee a portion of the loan, but it's only 10%. It used to be up as much as 20% back prior to 2020. So that's a big change, and it's a change, obviously, because, again, the SBA hoping to do some incentive here. So when people worry about a personal guarantee on a loan, which has always been a big concern, now we're only talking about 10% of the loan value.
That's a big difference. So, I mean, that's a way to get leverage. You know, I'm actually we're taping a class right now called Finance Basics for Business Owners. And we're about halfway through it. And I was just talking about leverage and what leverage meant, and why leverage is good and why it could be bad. Like, for instance, the 1929 stock market crash, right? Leverage was bad, right?
Right.
So, but what you're saying is that with the SBA, it's different, because there's almost like a stopgap of the bad, right? So you're limiting your potential losses. Is that right?
Well, you are, but again, the key is not all debt is bad. Well-managed debt is good. And what does well-managed?
Leverage, right? Because leverage is powerful.
Exactly, leverage. You're taking dollars now to be able to accelerate your growth at a low interest rate. And again, with the SBA, a couple of things to touch base on. These are 10-year loans. So at the lower SBA rates. So right away, you have the benefit of better cash flow management, because you're not facing the type of normal loan payments that you would be looking at in the first 12, 24, 36 months of a conventional loan. So, you know, there's just an inherent risk reduction right there. But again, and obviously a little bit more margin as far as your cash management goes, or your cash flow goes as well.
Yeah. Well, in my dad taught me that there's no such thing as a free lunch. So I'm assuming that somebody is, you know, getting compensated for that risk somewhere. What about fees on these loans? Are they different than other loans? Are they lower, higher? How does that all work? Is that where they kind of bake some of this in?
Well, let's talk about what's important. I think one of the key messages of our time today is, if someone's listening to this that is either looking to start a company, and we're going to hopefully convince them what better to do it through an acquisition than trying to greenfield it and grow it, or business owners that's been contemplating acquisition of a competitor for market growth, or whatever it might be. The key issue is, from the decisions and the rulings from the CARES Act in December of 2020, there's been several changes that are making this even more attractive for a period of time. And that's the key. It's a period of time. And so what we're going to talk about briefly now, you have to do something prior to September, the end of September, or let's just call it October 1st, 2021, or these will change. Now, who knows how they'll change, but we know that there is at least a deadline to the current enhancements of October 1st, 2021. And that means the loan has to be approved by that time frame. Doesn't have to be funded. It doesn't have to be funded, but it does have to be approved. So think about how long discussions with a potential buyer take. So that just means you have to back up and start thinking, if you're doing this, you don't want to sit around for a long time and do an academic review of it, because these things do take time. The typical approval from an actual commitment letter from a lender associated with the SBA is about 4 weeks. So, back up from September 1st, we're starting to see that through this summertime is the time to get very active with this, if this is something that really is a good timing issue for, anyone that has the opportunity to listen to this. But real quickly, the benefits are, in the original CARE Act, the SBA paid 6 months of the initial payments for the loan. And that was fantastic. Now they've changed that and reduced it now to 3 months, but 3 months payment by the SBA that you never have to pay back. I mean, again, that's cash flow and giving you a boost in the first 3 months. Now that's one area where something got reduced, but the area where they enhanced things really, to me, make up for that. And that is the SBA used to guarantee 75% of the loan, and the borrower would have to guarantee 25%. That's now 90% until October 1st. So now, like we talked about just a few minutes ago, the borrower only needs to guarantee 10%. And then another biggie that people don't realize how much this actually can add up to is they're waiving the guarantee fee. So not only are they extending the guarantee amount of the SBA from 75 to 90, they're actually waiving what is a normal fee as part of the loan process, which is 3 to 3.5% of whatever that guaranteed amount is. So you're talking about, for most loans, a $1 million loan, you're talking a savings right there of, depending on where the rate ends up landing, at least $27,000 to $30,000 right there. And so again, those are some of the changes that they've done, or benefits or enhancements that they did through the December changes in the act then. But again, those particular ones are only going to be in effect until October 1st, 2021.
Wow. So, okay. So if I did a $5 million loan, does that guarantee fee get waived too?
Yes, certainly does.
Oh, wow. But that's only, I have to get it approved before September 30th. So that could be like 150 grand.
Correct.
Oh my gosh, that's a lot.
Correct.
They could make that big. That's a good 1 day profit to make just by doing it now. That's interesting.
Well, as you and I have talked about, if there's a time to do something, this is the time, because there's never been, this is unprecedented. There's never been any time where an entity, a financing entity, particularly one that's had the reputation of the SBA over the past decades, that is being so aggressive and so business owner friendly, because they want to see growth, they want to see people employed, all of that. And this is a way that they're doing it, which is, again, we know that at least the current scenario with the benefits right now are going to go till October 1st. Who knows, again, what will happen after that? My guess is they might be brought back a little bit. Even then, as we talked about earlier on, the SBA acquisition financing instrument is a phenomenal way for either that first time wants to start a business or a business owner in growth to do it in a manner that will keep their, so friendly cash flow wise, and and is just a great tool.
Yeah, no, it's cool. So, gosh, well, I would assume that, people are just, I see people starting to talk about this, but we're certainly not the only ones talking about it. And I'm sure more and more will talk about it as a little bit of time goes on here. And then, I mean, there's a chance of where the SBA lenders could get overwhelmed, right? Where they're trying to meet this deadline at the end. So I'm assuming that probably we don't want to wait till 30 days before, I would guess. I mean, do you think it will pick up as people start to figure out what's going on here? Because there's not going to be more SBA lenders necessarily because of this, right? It'll get squeezed a little bit.
Well, what's nice about this is unlike the PPP loan, which was a phenomenal instrument for people, it overwhelmed a lot of the typical SBA lenders. When it comes to the SBA acquisition, there's actually entities out there that specialize in only loans related to acquisitions. And those can move very, very quickly. And they're not getting, burdened by too much or kind of the proverbial run on the bank. And it's best to go through them because they do know how to do it. They know the process. They're experts at it. Where your bank that's got an SBA lender who helped you with your PPP loan, that's great, but they might only do 1 or 2 acquisition loans, and many, many times it's the first time they've done it. They're just not very familiar with the process. So the good news is there are entities out there that have put together a little bit of a niche of specialty going through the SBA through the acquisition financing.
Oh, cool. Oh, okay. So they're used to the grind on this kind of stuff and can get them pushed. Okay, I got it. Well, that's neat. And also, there was something like for the new financing. What was the whole thing about the no payments? There was like there's no payments for a few months. Like they're waiving payments to kind of help also get you up and going and to provide incentive. Is that right?
Right. You can look at it as waiving the actual loan payments, or in some cases, people like to actually say the SBA is paying the loan payments for you. Either way you look at it, that there are 3 months under these new rules where the SBA will pay your loan payments under this model. So you have, and again, that's not something that's rolled into a loan. It's not something that has to be repaid. It is the government paying your loan payments for 3 months to give you that relief on cash flow.
Yeah. And you still have like another month after you close on a loan, right? So it's really like 4 months after the 3, I think. And then
that's correct. That's right.
I think there's even some other, I think there's even some other COVID stuff where you can even maybe add a few other months, but suffice to say it's at least 4. Which is huge.
It's important to get to somebody who understands this to help you navigate through it, because it does get a little confusing, including if you currently have an SBA loan. And so between last year to February 1st, 2021, and then from February 1st, 2021 to October 1st, 2021, whether you have an existing loan in place, a 7A, or whether you're getting a new loan, there's different components of loan payments that are done depending on the timing, and if you have one that's existing and adding to it, or whether you're starting with a brand new one. So there are some nuances to that to get someone who is familiar with this territory can help guide you through that. But there are a couple things typical to the government that do need a little bit more expertise.
Gotcha. So what's do you have any recent examples of how you've used SBA finance? Yeah, I mean, obviously no specifics, but just how you kind of use SBA financing in the real world and your own, the things that you're working on, just so people get a feel for the different kind of things that it could be used for.
Certainly. Working with an owner of a manufacturing company, privately owned, family-owned company, was just organically growing and pretty happy doing that, but always just wanted to have some additional growth, and was looking at different opportunities, including going out and raising outside capital and all those kind of things, not realizing that this was an opportunity. And of course, when a business owner has to go to outside capital, particularly if it's a family business, you're now bringing in outside influences that you really just don't want. But many, again, owners think that's their only option. In this case, I was able to introduce the whole concept of the SBA financing, acquisition financing. There had been a discussion going on with another company for over 3 years, and they knew that it made sense for the 2 companies to come together. They knew that the one individual was the better case of the buyer for the other, and they just knew. But they were for 3 years just talking about how great it would be if they actually came together in some kind of acquisition. Well, once I was able to introduce the acquisition financing from the SBA, we got moving quite quickly. We were able to determine what a fair value on the company was. We started working with a lender who specializes in the SBA financing. We know exactly what they're looking for, and it comes down to the cash flow analysis. If a company can show, the target company can show a certain debt coverage ratio from their cash flow, adjusted cash flow for the past 2 years, it's a green light for the SBA. It's a very simple, litmus test to see if it makes sense to go forward.
So just for the audience who doesn't know, like what is a debt coverage ratio? What does that show the bank, or what is?
The debt coverage ratio is so for an example, a 1.2 debt coverage ratio means that the cash flow of the company over the past 2 years, as shown not just on the tax returns, but also on some adjusted basis, is going to cover the actual estimated loan payment to a 1.2 to 1 ratio.
So there's a little cushion, there's like a 0.2 cushion kind of thing.
Okay. Right.
Got it.
And depending on—
Is that like the most important thing they look at? What is the most important thing they look at?
Well, like any acquisition, I mean, they do look at the buyer, the borrower, and the financial strength of the borrower themselves. Even though it's only guaranteed 10%, they do want to see the personal financial statements. They want to see tax returns on both companies, as well as the personal tax returns of the owner of the company that's looking to buy the other company. Just like any transaction, it comes down to the quality of the people and the quality of the entities. But from a standpoint of moving forward on the loan itself, if there is, if there shows that there's been good growth in the company, good overall management, everything else, the litmus test of moving forward for the SBA is if they can be convinced that that debt coverage ratio is covered for two years, previous years, that then moves forward to the more deeper dive in due diligence.
Got it. Okay. And you said that the whole process, I mean, it can take about 30 days. I mean, I'm assuming as long as you're pushing it through at a reasonable pace.
Well, you want to give yourself 6 to 8 weeks. And what usually ends up being more of the time delay is not the SBA. It's actually the buyer and the seller. And it's the buyer and the seller finalizing the asset purchase agreement. And that's why it's very important to start reviewing those kind of things very early in the process and not wait until you've gotten the commitment letter from the SBA, but begin drafting an asset purchase agreement, reviewing it, all those kind of things. So really, which is unusual in many, many cases, it's not the SBA that's the delay. And that's why making sure your process of identifying, valuing, coming up with a letter of intent for the potential seller, due diligence, and then moving towards the actual drafting of a purchase agreement is done in a very effective and time efficient way, so that it turns out that the buyer and seller looking for the financing is not the hangup.
Got it. So, no, that makes sense. So now I'm kind of thinking here, even, there is a timeline on this. Obviously, it's a window of opportunity. So if I'm sitting here going, wow, this sounds great, something I would definitely be interested in, but I don't even know where to start. Like, how would I even get started in this? How would I look for companies, find companies? I mean, should I just go see what's for sale? Should I, hire somebody? I mean, how would I go about just finding the company? It seems almost like a 1031 exchange, right? Where like the real estate thing, where you sell a piece of real estate. Now you got to go find a piece of real estate. Sometimes you get under some pressure there that may not be so comfortable. But if I'm trying to find a business so I can, take advantage of this, do you have any advice for how to get started on that, like the search process?
Well, the first thing is setting what's called a target criteria. I mean, out there in the world of venture capital and private equity, where these professional entities are looking to invest in companies, they have very specific criteria of the type of businesses they're looking at. Well, it should be the same thing for either an entrepreneur wanting to buy a business for the first time, or whether it is a company that's looking to grow. They should determine what the criteria: size, geographic location, type of business. If it's the individual who wants to get into business for the first time, It should be something in an industry that they have a passion for. So kind of understanding and setting out, and it could be a tough exercise, but determining the basic criteria of the type of company that you would like to acquire under, again, whether it's for your own start of a business or whether it's for a growth strategy is critical. But then to go and find those actual businesses, there are ways to do that. There's databases out there and that kind of thing. But of course, I'm going to recommend you work with an advisor that has done this and knows how to go out and find those businesses. Because one thing you will find, many people understand there's these business broker websites and buy, sell, and all of that. Well, having been in this industry for some time now, when a business gets to one of those websites, it's usually what we basically say it's too late. It means that the business is probably not an attractive actually acquisition target. You want to go out and find the business owner that is not even sure they want to sell yet and have someone contact them on your behalf to find out where they are and go from the process from there. So you can spend a lot of time going on databases and you might have some luck, but if you really want to find a real target that is the kind of business you want to potentially acquire going forward that's really aligned with your passion and or your growth strategy for a company, it does usually benefit you to at least have an advisor to help you find those targets out there. And then most importantly, put a value on it, because none of this transaction is going to happen unless there's a fair value agreed to between the buyer and the seller that the SBA lender is in agreement with. That's the trifecta. First the buyer and the seller come to agreement, but then the lender has to agree that that's a fair value and a fundable deal. And then you move from there.
Got it. So you had mentioned like hiring an advisor. So, I mean, so someone like me, if I said, hey, you know, my business, what I do, I said, hey, I want to go find something and acquire another firm or another like business, up to 5 million is fine. I mean, how would you like help somebody like me? Like, how do you get involved and what do you take care of versus what I have to take care of?
Well, it's interesting because a lot of the clients that do come to us are usually referred by either a accountant or a lawyer or a wealth manager for those individuals, because those are trusted advisors, and for the first time they're floating out this idea of some type of acquisition. And so that's really where we get these the referrals that turn out to be these wonderful engagements where we get to guide entrepreneurs or business owners through this. But once we are introduced and sit down and determine kind of, again, what type of strategy they're undertaking, what kind of business they're looking for, size of business, all those kind of things, we will begin an actual search where we anonymously target different businesses that we're able to identify through the process of having done this and through the different mechanisms that we know to go find available businesses, or again, even businesses that the owner might not necessarily be actively marketing the business for sale. So we just have experience in identifying those businesses and getting in and being able to talk to the owners of those companies. It comes with experience and time, but that's what we're able to do. And then that begins a process of actually valuing the business, doing a letter of intent of a certain value on the business, and then hopefully moving close, helping do the due diligence to make sure there's no surprises and the valuation is supported. So we have an engagement type structure that we take these type of clients through, but it begins obviously with really sitting down and hammering out very targeted criteria for a business, and then begin going and finding candidates for that, which is much more of an art than it is a science.
Yeah, so I guess you talk about the financing. I mean, that sounds like it's a great deal, et cetera, but you still have to go through all these challenges that would come with any sort of M&A transaction, right? I mean, just because you have to make sure that the seller sells and that the deal is advanced, right? That the deal gets to closing no matter what. But at least it's nice that the financing is such a good deal and it kind of takes that challenge, so it's not as stressful to process, I guess.
No, it's not.
But yeah, you still have to go ahead.
Well, again, the the individual that's looking to do an acquisition for the start of their business ownership phase of their life, that's where you take a lot of time on the front end, really determining what type of businesses they're looking for. Many times they have opportunistic things that come along and they get excited about it, but you really find out it's only about the fact that the timing of the opportunity. It's not really about what they would really have a passion doing. So there's a lot more work up front on that.
Yeah.
Many times though, on the business owner that's looking to grow through acquisition, you'll find out that the scenario that I shared earlier is many times the case where they've been talking to somebody out there about coming together, one of them acquiring the other one, because they know their competitors, they know where another business might be a great add-in to their business and growth. And so they're out there talking to these different businesses. So many times they've already, because of course, you know, the industry they're in, unless they're wanting to diversify, you know, substantially, they're looking to acquire for growth, for market share, for intellectual property. They already know kind of who they are. So, and have been talking to them. So in that case,
That's a good point.
it moves rather quickly to the actual deal structure and the SBA financing. The other one takes a little bit more time up front, but it's important to spend that time so that you don't just react to an opportunity that comes up, and you probably could get it financed depending again on it. But if it's not really something that you have a passion for doing, and it is going to be your first, you know, true business owner, and you're going to have the loan coming in to help you do that, you just want to make sure you want to wake up every day loving what you're doing.
No, that's true. Yeah, so you can't let the tail wag the dog, so to speak, right? I mean, it's a great deal, but you don't want to go into buying a bad company. That's not a good deal overall. So yeah, you want to be careful with that target. You don't find the right company process, of course, and not just fall in love with the deal, like the financing deal.
Right.
So that means that when you were talking earlier about like the merger thing, does that mean like if I had say I had another company that we always knew it'd be kind of great to merge, but we really couldn't, you know, get sort of a handle on. So they say both of our companies are valuable, right? But neither one of us really wants to put up the cash and be cash poor to buy out the other. And or we know that the real opportunity is when we merge, the 1 + 1 = 3, where it's like, hey, look, when we merge, we have this great opportunity to take advantage of, but we can only take advantage of it with a capital infusion. And if we go to a bank and say, hey, we want to merge and we want growth capital, they'll be like, thanks, but no thanks. But what I'm hearing is that if you get an SBA acquisition loan, you can kind of go through the side door and get that problem solved. Is that right?
That's right. Exactly right. You know, it'd be interesting. I would bet that if you and I were in a room with 100 business owners and we asked them over the last 5 years, have you had a conversation with someone, a competitor, or someone within your industry about, it might make sense for the two of you to come together in a merger or something? I bet 70% of the room would raise their hand.
Wow. Yeah, so it's like a speed dating or a matchmaking service,
Right.
That's actually a really good idea.
The number one obstacle for business owners moving forward is the concern about financing, having to put a personal guarantee, knowing inherently going the conventional route, there's no way they're going to be able to meet a purchase price that's going to be much, much higher than the value of those physical assets. So again, the SBA got pretty smart about it and has this mechanism, which really is a cash flow based loan structure, where it is incorporating that goodwill as part of the collateral. When I first heard about this a few years back, I had to double check, because it was like the government's actually willing to take the goodwill as collateral in a loan structure, and the answer was yes.
Yeah, well, I mean, a lot of these startups nowadays, I mean, you can't get around it. I mean, tech going on, and everything is so data and information driven, and there's so much value in it, right? It's like,
Yep.
It's hard to, you're going to have to do it at some point to get around it. Just a lot of less asset-based startups nowadays, right? Yeah, that's cool. So, what did I not ask you? I mean, like, what questions did I not ask you that I should have, or what, did you have any like parting advice for business owners that might be watching this? They've gotten to this point in the video, they're obviously interested. So in this whole concept, do you have anything else to kind of cap it off?
Well, obviously, they can contact us for more information. We'd be happy to just, again, give some thoughts and advice and answer some direct questions. I think the key thing right now, though, is if this is something you've been considering, if it's something you've been in discussions with, you're going to need to move fairly quickly because, again, the scenario right now, which is the best that I certainly have ever seen in my career of 35 plus years, October 1st will come quickly. And remember, you have to back up through the process of negotiation with a potential seller, getting through the valuation process, all the drafting of the key documents that are the deal documents, not even the loan documents, and then obviously the closing of the loan and giving the SBA the time for them to do what they need to do. So really, you should be thinking, to be on the safe side, 8 to 10 weeks if you want a loan approved before October 1st. So I think that's really the critical part here. If this resonates with you for whatever reason and you wanted to learn more about it, then obviously reach out to us and we're happy to answer any questions. But it's the time frame of this that I think is the most important thing to relay. So it's not something you can come back and listen to this video in 3 months and say, okay, now I'm ready to go. That could be a little tight.
Yeah, I was going to say that it seems to me like looking at it from my own perspective, the hard work would be finding a good company, the right company, getting through due diligence, and really focus. So this is going to be like a laser focus type thing. You say, look, if you really focus and invest the time in this, you can have a very, very valuable type transaction on your hands, right? And really, really do well here. It just requires a lot of focus for a short period of time. So that's my takeaway from this, what you're saying.
That's exactly right.
Like a lot of opportunities in life, I mean, it just requires focus. When you get those opportunities, you got to jump on them, right? Because there's not that many in life to have. So this reminds me, there are so many questions. I mean, that we could go into on this. Would you? And I appreciate your time today. I know you're busy. Would you be willing to do like maybe a live event or something where we had some entrepreneurs call in or people thinking about this? And I know you know a lot of stuff and you're not afraid to be on the hot seat. I mean, would you be willing to do something live or we just Q&A with different people, like an Ask Anything type thing?
I'd be happy to. Very much enjoy those. And again, under a live scenario where they can ask their questions directly, I'd be more than happy to do something like that.
Cool. All right, cool. I'll work on that. I'll get that set up. And last question, just because I think sometimes, I don't know, whenever I watch stuff, I always appreciate getting to know the people a little bit more as people and not just robots doing business. I mean, what do you do for fun? What do you do when you're not working and closing deals and talking to the SBA?
Well, number one, obviously my family is most important. So spending time with them, and I'm at a stage now where spending time with my lovely bride of 34 years is important, and we enjoy doing things together and, just spending time, hopefully doing more travel as things open up. But I do enjoy from a standpoint of attempting to stay in shape. So biking and running and being outdoors as much as I can, hiking and those kind of things are what truly love to be outdoors, and doing anything possible to stay outdoors as long as I can is what I like to do. So, cool. So that's kind of.
You've climbed, I mean, you've done mountain climbing too, right? Like you've done some serious climbing. I'm not talking about like little short ones, right? Like you've done some serious climbing.
Yes, I have climbed Mount Kilimanjaro, and it was quite a adventure, that was for sure. And hope to do more of those things as well. Maybe not quite as high as that, because that tops out at 20,000 feet. So I can tell you there's not a lot of air up there. So, but yes, those are more of the things I would enjoy doing.
So what's harder, growing a business or climbing Mount Kilimanjaro?
Growing a business.
I think a lot of people watching this are going to appreciate that statement.
Well, as they know, growing a business is not for the faint of heart. And the things we're talking about are endeavors that people undertake that are all about their commitment and their compassion, usually to their businesses, but to their employees and to their communities and those kind of things. And that's, you know, I know you enjoy helping people that have that kind of mindset. You know, these are major things when you do, you know, whether it's the SBA or anything else, and you look to intentionally grow your company, it is a very difficult thing. And that's why, again, I've loved to make a career out of helping people like that achieve those goals.
That's awesome. That's awesome. All right, cool, man. So, hey, this has been awesome. Thank you today. This has been really informative. I think that's great takeaways here. If people, you know, if people want to get a hold of you, I guess they can easily come through me. So, you know, we always post kind of links at the bottom of where we post the videos and whatnot. So if you want to get to Jim or talk to Jim, definitely come through me. I'll hook you up with that, or I can talk to me about it. But then also this live event that we're going to do, or that, you know, we are going to do it. I'm going to have to set it up. Jim said, everybody heard him. He said he's going to be able to do it, or he's willing to do it. So I'm going to get that set up. We'll probably do that. Gosh, we should probably do that in the next 2 or 3 weeks, huh? Because the timeline, I mean, can't really wait around for it. So let's do that soon. So I'll be posting that as well. And if we can get that booked before we post this video, I'll go ahead and post the link on this video somewhere in the comments so that we can do that. But yeah, that'll be awesome. I'm really looking forward to that, because I think, you know, you have some people come up with questions that you didn't even think of, and it's just really cool to think through. So I think everybody can learn from it. So
glad to do
Eddie,
it. Hope it happens.
Yeah.
Very much so.
All right. Other than that, listen, I'll let you go. I know you're busy, and I appreciate today again. And Godspeed to you, brother.
Thanks for the time. I really enjoy it, Dan. Appreciate it.
Yep. See you later.